Hi, and welcome to the Stockscores Market Minutes for March 30th, 2015. One of the most common questions I am asked is, when do you buy the breakout? One of the important technical signals of a buy is to look for breaks through resistance. Now, not all breakouts are worth buying. You should understand what breakouts qualify, but the question then is whether you buy the breakout or you wait for a pullback. I have found that probably 2/3 of the time, stocks that break out will pull back, giving you the opportunity to get in at a lower price. And so given these odds, it would imply that you should wait for the pullback. The problem, however, is that the strongest performing stocks, the ones that end up doing the very best, typically do not pull back. And so by waiting, looking for that lower entry price on a pullback, you will often get left out of some of those big winners. And so generally speaking, what I do is I just buy the breakout with the understanding that there is a good chance the stock will pull back and I could have got it at a lower price, but at the same time, I'm going to be on board the hottest of stocks. All right, let's get into this week's analysis. Oh, pardon me, here's an example of what I mean. Here's REPH, a stock that we discussed in one of my webinars on March 9th as a stock that had real good potential. And there you can see the breakout on March 9th from an ascending triangle pattern, the rising bottoms, flat line of resistance. And notice that this one really didn't pull back. It just marched higher day after day and has become, a 100% gainer in less than a month. And all that started with a breakout where there really wasn't a pullback. All right, let's get into the analysis now. Here is the intraday chart going back 1 month on the S&P 500. You can see the selling pressure that we saw this week, and that took the market down to the lows of mid-March, which has acted as support. The problem that I see on this chart is that falling top that is formed. You notice on the 23rd here, we made a top that was lower than the highs made in late February, and that implies that the sellers are starting to gather some strength. So I am worried about this. I do think that the market could hold that green line of support going into next week, maybe bounce back a little bit, but you can definitely sense that there is some pessimism building as the market goes into earnings season, which will start the second week of April. Here's the longer term chart of the S&P 500, and here you can see that we're still in that long-term upward trend. The green line of support is intact. We haven't tested that or broken through that yet. But notice also that the pace of the tops, how quickly they are rising, is diminishing. That's why we have this what's called a rising wedge pattern here, where this line that I've drawn in red across the tops is not rising as quickly as the line in green across the bottoms. And that again is a sign that the buyers are losing some of their enthusiasm. Now, it makes sense if you understand what's going on in the market. Investors generally thinking that the U.S. Federal Reserve is going to start to raise interest rates. There's also a sense that the global economy is not doing all that well, and maybe it's going to be hard to justify the gains made in stocks thus far. That makes me think that money is going to rotate out of those leading stocks, which was in the large cap space, the dividend payers, which aren't as attractive in a rising interest rate environment, and that money is looking for places to get return. One of the places is in the small caps, which made a fresh breakout 2 weeks ago. This week it pulled back, but still it has a more promising looking chart than the S&P 500. So I do think that the trend this year is going to see money moving or rotating out of some of those big name companies and into the smaller cap names, as well as some of the foreign markets like Europe. Here's the TSX, which is struggling worse than the S&P 500. You can see that sharper falling top on this 30-day, 60-minute chart, but again, held support at the lows of mid-March and probably bounces up off of this next week. But until we can break that cycle of falling tops, that red line that I have drawn, I want you to be pretty cautious with the Canadian market. You can see over the last 6 months, really the time since oil has started to struggle, and mining has been struggling for some time, even longer than oil. But you get a sense that the pessimism is building in Canada. There's a lot of uncertainty. You can see the uncertainty in the volatility in the market over the last 6 months. Canadian market, a lot of sharp volatility. Compare just the last 6 months to the previous couple of years where it was a pretty orderly market, and now you can really see that uncertainty picking up, and there's certainly a lot of people who are growing bearish on the Canadian stock market. The speculative market is stable, certainly not good, certainly I would say ugly, but stable over the last 3 months. And if we can break to the upside from this rectangle consolidation, I've drawn that rectangle with resistance in red, support in green. If that can get a breakout, then we could see a turnaround. But what's going to do that? It's really going to have to be a declining US dollar, which will give some support to the commodity sector. And at this point, I just don't see it yet. Treasury bonds bounced off of the green trend line of support. I think we're going to see this market form a falling top here. In fact, this week it lost that momentum from the bounce, and we'll see if that then causes the Treasury bond market to roll over and retest that green line of support. If that happens, we will have that falling top pattern, and that is a long-term reversal pattern for bonds. Again, something that makes sense if you believe the US Federal Reserve is going to be raising rates sometime in 2015. That raise of rates is going to help the US dollar, and in the last week or two, we've seen the US dollar come back from that parabolic upward trend. Why do I say parabolic? Because the trend really ran up and away from the trend line in the early part of March, and since that time it has pulled back to the trend line where it found support. Now the key thing here is, does it move to new highs again, or does it make a falling top and ultimately break that green line of support? That's what you want to watch for on the US dollar. Real critical for the Canadian market, given that it's a commodity-based market. So it's something real important to watch for. My sense is, at this point, this is a bull market for the US dollar. We shouldn't say that that bull market has any signs of ending until the market breaks down through that green upward trend line. Gold suffering with all commodities as that US dollar rises. It's trying to stabilize, but the fact that there is a cycle of falling tops on this chart tells me that in general, investors are not too optimistic with gold, and I think we could see a breakdown through that green line at some point this year. That would be a real negative for gold investors, so you want to be real cautious if you are long gold and gold mining companies. The the oil market broke that downward trend line, the steepest of downward trend lines this week, because of what's going on in Yemen and other areas in the Middle East. That's a political event that I don't tend to trust in the chart, because really oil long term is going to move on supply, demand, and the US dollar. And so I don't know that this is a real strong signal that the oil market is bottomed. It's encouraging, but I think there's a lot more work to be done in oil still. So I'm still pretty cautious on the oil market. But if we can start to break through that $12 mark on the OIL ETF, that would be a positive. Finally, fear is really showing that there is complacency in the market still. The market had a little bump up in fear this week, but nothing too extraordinary, nothing worth noting. And so in general, fear is still not a factor, but complacency is something to be concerned about. We'll have to keep an eye on that. So my outlook, bullish long-term on US stocks, neutral short-term, neutral long-term on Canada, bearish in the short term, and bearish on both time frames for gold and oil. US stocks remain in a long-term upward trend, but the buyers appear unmotivated in the short term. Earnings season will be critical for the long-term trend for stocks. That's what the market seems to be looking toward. We'll have to see how things pan out through the month of April. Canadian stocks are struggling with pessimism in the short term, and gold and oil trying to find stability, but the trend remains bearish. Well, that has been the Stockscores Market Minutes for March 30th, 2015. Have a great week in the market and trade well.